At this time of year, many people make gifts to families and charities. Today, on In the Legal Know, Vincent Russo will discuss how these gifts are treated for gift tax purposes. Taxes on the gifts, Vincent, tell us, come on, who's the Scrooge here taxing gifts?
Well, yes, there are taxes potentially, but there'll be good news at the end of this story.
Okay, good.
So no worries here. But we do have a federal gift tax law. And many people are very confused by this concept of a gift tax if I make a gift. So what's a gift? A gift is where I give you money or property and you don't give me a value back of equivalent value. So I make a gift of $10,000 to a family member. That's a gift, and there are these gift tax laws. When you get to a taxable gift and you actually have to pay a tax, it's at a 40% tax rate, which is really high. But the good news is people don't have to pay gift taxes because they're not making the type of gifts that would cause one to have that kind of tax come into play. But there are also gift tax returns that have to be filed by April 15th of the year following the gift. So we have to pay attention to these rules. So kind of to summarize the types of gifts, there are three types of gifts I'm going to talk about today. And the first is an exempt gift. These are gifts that are not subject to tax at all. The second group are annual exclusion gifts. And that's what most people know something about. They say, well, I can make a gift of up to $15,000 a year. Well, we're going to clarify that and clean that up a little bit. And then there are taxable gifts. These are larger gifts that go beyond the gifts that are exempt and beyond the gifts that are annual exclusion gifts.
So when we're talking about the tax, we're talking about those who are receiving the gift. It's the tax that they have to pay. Is that how this works?
Actually, it's the reverse.
It's the reverse. Okay.
It's the reverse. Very good.
Okay.
It's the person making the gift who would be subject to the gift tax rules. And when you receive a gift, you receive it tax-free.
Okay.
All right. So that's often a good question. Clients will ask me, do I have to pay tax when I receive a gift? And the answer is no. So let's start with exempt gifts. Let's start with that category. All right. And there are three areas I want to touch on today. First are gifts between spouses. So married couples can make gifts of an unlimited amount, not subject to gift tax. Basically because the government treats a married couple as one person. So they're giving it to themselves. The second group are charities. So here, charitable gifts can be made. And this time of year, a lot of people are thinking about how to help the church, their local parish, and they want to make a charitable gift. So there's no limit on how much you can give to a charity. All right? And then the third group, and this is interesting, these are gifts you make to help someone else. If you pay someone's tuition directly to the educational institution, or if you pay medical expenses directly to a medical provider or pay medical insurance directly, then there's no limit on the gifts. So we start with, here's a group of gifts. You don't have to pay any, you don't have to worry about it. They're exempt. Then we're going to get to the annual gifts. Then these are the annual exclusion gifts.
So you explain what the exempt ones are. So what would be the annual exclusion gifts?
All right. So that's where we'll clarify this a little bit. And it changes every year. So in 2023, you can make a gift of $17,000 per person per year to as many people as you choose.
$17,000 per person.
Right, per year. All right. And if you're married, you can make a gift of twice the amount, $34,000. In some situations, you might have to file a gift tax return if you do it as a married couple. If you do it as an individual and make a gift of $17,000, no gift tax return. In next year, it'll go up $1,000. So that 17 will become 18. It gets adjusted every year. All right, so these are annual exclusion gifts, and that's what most people think about. Well, I can't make a gift greater than that amount because something bad will happen. but they don't know what the bad is. And it isn't bad.
Right.
But we have to talk about then taxable gifts.
Okay. So what does happen then if you go over that amount?
All right.
What's the bad news? Which you said
don't go
is
to
good?
hell.
Okay.
All right. So if you make a taxable gift, you go over that amount, the government says we're going to give you an exemption amount where you can tap your exemption. It's like taking money out of a bank account.
Okay.
And that exemption amount during your lifetime is $12,920,000. So if you make a gift of that amount, then during your lifetime, there's no taxes to be paid, but you do have to file a tax return.
Okay.
All right, so we call it the lifetime exemption. Here's an example. So if someone wanted to help their daughter, let's say money to buy a house, and they want to make a gift of $87,000. The taxable gift is $70,000 because you can give away $17,000 without any tax consequences. And then it's offset by that $12,920,000, which means you still have a balance left to make gifts of $12,850,000. So the bottom line here is there are these rules. You do need to follow them. You may have to file a tax return to show you're using up your exemption, but no one's paying gift taxes. And that's the good news.
As we, come to the end of the year, and we're beginning to think about, closing out our accounts and everything and what's, next year. I know people talk about tax deductions for gifts that they're given. So how does that all work?
Okay, good question. So I said earlier that you can make a charitable gift without any limits. Now the question is, can I take a tax deduction on my income tax return? So if you're itemizing your deductions, the answer is yes, you can. There is a cap. Most people don't exceed the cap, which is a general rule, 50% of your adjusted gross income. All right, so charitable gifts are really important, not only, first of all, to help the charity, to help your parish, the church, for example, but also you get a tax benefit from it and you save some income taxes. Well, good deal.
Yeah. So, you said a lot today. I'm feeling comfortable because I don't have that much money to give away. But could you just summarize? What are the basic points of what you tried to share with us today about taxes and gifts and all that?
All right. So someone's going to make a gift. First, exempt gifts to spouses, charities, paying tuition directly or medical expenses. Just do it. Don't worry about it. Then make annual exclusion gifts of up to $17,000 per person per year. And don't worry about it. No tax return to be filed. You can do that. And then if you want to make larger gifts, you are going to have to file a gift tax return. It's going to be offset by the lifetime exemption. And there will be no taxes.
Okay. So most of our audience, we're good. Right. We don't have to worry too much, right? But these are important things to be thinking about because it can become so complicated. Or people might think they're in trouble, and really then they're not.
That's right. I want everybody to be happy and not worry about this.
Well, thank you. Thank you for doing that for us. Thanks, Vincent, for clearing up for our viewers who are considering what gifts to give to family members or other charities. We really appreciate you being with us today.